Hello and welcome to Business Today. I'm Siddharth Zarabi, and with me today is the very distinguished jury for the Business Today Best Bank Awards for 2023-2024. Mr. Jayant Sinha, former Minister of State for Finance, Chair of the Parliamentary Standing Committee of Finance. Mr. Dinesh Kumar Khara, erstwhile Chairman of the State Bank of India. Kalpana Morparia, a name that is known all across Indian banking. Gunit Chadha brings us the foreign perspective or global banking perspective here on the panel with us, and Mr. Subhash Chandra Garg, someone who spent a lifetime in government, including in the Ministry of Finance. And with that very great panel, what I want to do is to go to Mr. Sinha first and ask him for comments on the health of the Indian banking system. This is 2024. We are heading into 2025. Mr. Sinha, give us a recap of where does India's banking system stand today.
Thank you very much, Siddharth, and what a wonderful honor and a great privilege to be a chair of this very distinguished jury. And of course, we awarded and had a long discussion about all of the different prizes today. Much of our discussion happened very smoothly and very quickly because the Indian financial system right now is doing extraordinarily well. The long, hard work that we've done over the last 10 years to restore strength and resilience to the Indian financial system is now paying off. Whether we look at our public sector banks, our private banks, the NBFCs, all these different sectors of the financial system are doing very, very well in terms of growth, in terms of profitability, in terms of NPA, and also in terms of the services that they're delivering to customers across India. And the innovation that we're now seeing in the financial system is quite remarkable, particularly because the financial performance is strong, but at the same time, we are pushing the envelopes in terms of what is possible for customers as well. So all in all, a wonderful position for our financial system to be in just now, to be ready to continue to power India's growth and take us to Viksit Bharat.
Thank you very much, Mr. Sinha. One of the remarkable features, if we take a look at the most recent quarter for the top four banks, is a ROE of 16 to 20%. Mr. Khara, and I'll come to Kalpana also on that. Indian banks are running a very healthy book. How did that really happen?
No, I think what has happened is the whatever pitfalls were there in the system, they were very clearly evaluated, and based upon that, the remedial actions were taken. And now it has become part of the policies and the practices of all the banking system in terms of identifying the risk in good time and ensuring that there should be sufficient mitigations in place. Having said that, I would also like to mention that the banks have been very well capitalized over the past couple of years. And it is not merely underwriting which has improved, but also very effective control and follow-up. There's also something which has helped in terms of ensuring that the quality of assets remain the best. And that is something which has helped, because all said and done for all banks, the major earning comes from the interest. And if at all they're in a position to underwrite in the best possible manner and ensure that the quality remains the best, their ability to generate much better returns are very much there. And that is one of the reasons why the ROEs are quite high, and similarly even ROAs are also quite high. And that is something which is helping in terms of generating more and more capital for the banking system too.
Kalpana Morparia, you spent an entire lifetime observing various, ebbs and flows of the Indian banking industry. With that kind of ROE, is everything hunky-dory, or are you also concerned about some of the shadows at the fringes, including people taking multiple loans and those loans being granted at very low credit scores? Should we also take into account some of those shadows and discuss them?
So we talked about the golden period in banking in India. I've been in banking now for 49 years. This is truly the golden period I've seen. And I would give a lot of credit to the use of technology for this. So whilst recognizing your concern in terms of, credit growth, particularly in the unsecured segment, I think part of that is actually driven by switching from the unorganized sector into the organized banking or NBFC sector. And part, of course, is people are far more comfortable with leverage, unless a generation like mine, which always believe you save first and then you borrow or enjoy your lifestyle. But I believe that with technology the way it is evolving now, it's far, far easier for people to track the bad credits. So I don't really see a big NPL problem kind of coming up. Of course, we will all be swayed by what's happening in the global economy overall, but the stance that our regulators taken, the well capitalization that Mr. Khara referred to, and the use of technology, which today gives far more information about individuals than we've ever seen before.
Gunit, I want to come to you on the international perspective and comment about this because no one's writing about it. I'm not endorsing it, but I need to throw these words here. Is this a shaky pyramid that's been built up due to this very aggressive lending? And should we even be mentioning subprime loans in the Indian context? You've seen global banking. What would you say?
No, I echo what's been said by Jayant and the other jury members. I think India is standing at a extremely sweet spot where you can, and it's not just versus other emerging markets, but relative to the developed world, whether you're talking about US or Europe or even China. I think India is standing at a very good balance between its sort of growth, quality, and profitability. That sort of matrix is. And here's the interesting thing, and marrying the point on technology, which Kalpana mentioned. I remember a decade ago, building inclusive banking was an obligation on banks. Today, that is the opportunity amongst banks, NBFCs, and the whole different sort of ecosystem which is creating. So what was an obligation is today the opportunity, and I think it does great credit to the policymakers and the regulators as to how they have built this ecosystem.
Okay. Mr. Garg, I'm coming to you on the point about technology and ease of access. And viewers, the jury deliberations are not out yet, and I'm feeling sorely tempted to mention that, but I can't do that. But I can tell you this very, very intense half-a-day jury deliberations have gone into multiple aspects, and that's where I'm picking up the technology point to throw to you, Mr. Khara. Technology, ease of access, easy KYC, onboarding is very fast, lending is very fast, but is there a flip side to it? And is the system, including the institutions, the regulator, behind the curve? Because one of the biggest things that you hear from the average bank account holder is the fear of fraud. Do you think this is a very serious issue?
I think this is a very important issue to look at. And I remember in 2017 to 19, when I was in the system, the banking sector was at its very, very poor state. The NPAs were very large. The banks were out of capital, or public sector banks especially, and things were very difficult. With a lot of capitalization, also the economy turning around in the sectors where most of the NPAs, etc., were there. Steel, power, and others, a lot of change have taken place, which has helped in banking system to turn around. The technology brought to my mind the best connect to the unbanked, not the larger corporates earlier, but smaller corporates, businesses, individuals, and that kind of banking experience which has happened over last 5-7 years has really helped in transforming not only the banking of the people unbanked, but also the profitability and others of the banking. But I must bring one important change to the notice of our jury members and the people. There is a very big change in the portfolio of the banks. While earlier, about 40 to 45% of the bank loans were for the industry. Today, it's less than 25% of loans which are in the industrial segment. And most of the NPAs were also in the industrial side, not on the personal side. So the portfolio which is now the principal portfolio is the portfolio which to my mind is relatively risk-free or less risky. You go for farm loans are risky, but the government has made the farm loans literally risk-free. Individuals, personal loans, housing loans had never seen the kind of defaults and all. MSMEs also, the government did bring a lot of programs to make help. So what we should do in the good times in which we are living today is to watch out whether there are risks building in what we consider as literally risk-free portfolio.
And which is what the RBI seems to be doing.
Exactly. So that is where the regulators are taking note, and I think we would be doing much better if we want to guard our banking system on a sustainable, strong growth path for longer, to see these spaces, the personal space, the MSME space, and the services space.
Mr. Sinha, I want to take that point forward because as you chaired the jury and every other member, there was a significant discussion about the payment ecosystem. In a growth economy like India, people have ambitions, they have aspirations, but so do fraudsters. So I want to come back to that point. Are more checks and balances needed to curb fraud? Because the numbers are staggering that we have heard. What needs to be done, sir?
Siddharth, it's a continuous process, and we in fact had a series of hearings when I was chairing the Finance Committee on cybersecurity and online fraud, and we identified a number of gaps, many of which have been closed. That being said, my father-in-law is 92 years old. Every single day via email and WhatsApp, he's getting people reaching out to him saying, I've got $1 million I can send you from Afghanistan. I have $100 million I can send you from Nigeria. I've got a product I can sell you. So lots and lots of people who are not as sophisticated in the digital financial system as many of us on this jury are continuously being hounded and are continuously being shown these kinds of attractive returns and attractive offers, which then result in a situation where they end up sending their money and then really feeling badly about it. And of course, we also know that there's all kinds of hacking and all kinds of ways in which you can penetrate some of these systems and so on. So it's a continuous process. The bad guys are out there. The government is taking action, but it's also very important for consumers to be aware of how online fraud can actually work.
I want to request other members of the panel to join in on this, maybe Mr. Khara. And as I say that, I also want to remind everyone, over the last 10 years, sir, we have seen near complete proliferation of Aadhaar, PAN, and those databases. We have heard stories about leaks also. Is more specific action needed? You run India's largest bank for many, many years. What more needs to be done, sir?
Well, of course, what was mentioned by Sinha Sahab in terms of the cyber risk and also the role which is required to be played by the customers. I think there is no second thought on that, but I would only like to further add that when it comes to this kind of a risk, what we are observing of late, of course, technology has brought in a whole lot of convenience, but with that convenience, this whole problem of cybersecurity has come in. I think it requires a continuous investment in terms of technology. And also, as far as the ecosystem is concerned, it is not merely at a bank level, it is at a network level also. The security at a network level, security at a bank level, and also the government authorities. There has to be a collaborative effort in terms of ensuring that we're in a position to protect the customers, which eventually will ensure that the customers' confidence into the technology is also maintained. So, what you talked about, the adoption of the PAN and the Aadhaar, etc., they are very, very important when it comes to identifying a particular person. But yes, of course, unless and until there are enough counterbalancing checks available to ensure that it is rightly being used, and that is something which was done in case of UIDAI. Unless and until authorities are registered with the authority, they cannot make use of that. So I think this is something which is very much required, because otherwise the fraudsters are going to make the use of this particular facility also, and they can actually create a havoc in the system. So I think it's a very well reckoned fact that there should be enough control mechanisms for using such kind of identification, and for that matter DigiLocker, etc., they should be used only by identifying institutions only. It cannot be used by all.
And viewers, perhaps as we live in what is called the Blinkit generation, ease of access and technology, the younger generation takes it for granted. But I'll shift the discussion in the remaining few minutes that we have with this panel here to a larger point. And I come to you, Kalpana Morparia, on this. In the recent past, we have seen the regulator, the RBI, come down heavily on certain NBFCs. We are not taking names here, but from your perspective, and more than 5 decades in this sector, are there significant risks that we are facing, and are the RBI's actions warranted?
Fortunately, now not being a part of an Indian banking system or an NBFC system, I can be very open on this. I think Reserve Bank of India is rightly focusing to ensure that no regulatory arbitrage takes place, because the NBFCs do not have the same level of regulatory compliance requirements as an NBFC does. And therefore, rightly, the regulator is concerned that you don't use this regulatory arbitrage in such a way to eventually cause a systemic problem to India. As you know, India has weathered these various storms that are coming phenomenally well. And I think Reserve Bank of India has done a phenomenal job, particularly in COVID and coming out of COVID. India did not face the kind of inflation that you saw across all of the developed world. And a big credit for that really goes to the way the Monetary Policy Authority behaved there, as well as I think these kind of regulations are required in a market like us. You talked a little earlier about is there a great exuberance in credit? If you look at the macro level, it is not so. If you look at any other emerging market, forget developed markets, India's credit to GDP ratio is still under 70%. So at a macro level, it's not a concern. But you could see bubbles coming up, particularly with the advent of any regulatory arbitrage.
Okay. Gunit, just to take that point, do you think the point that Ms. Morparia makes, is a structural shift also underway in our banking? Is that visible to you, particularly given the fact that the credit deposit ratio is rising? We are seeing a shift happening, Gunit.
In many ways, a rising credit deposit ratio is also indicative that there is good demand for credit, which you can look at it from the positive side as well, right? Though with specific banks, that may be an issue. But just to complete the point on NBFC, since that's something which I founded a few years ago to build an NBFC business. Here's the interesting thing. 30 to 40% of the customers we lend to, right, are new to credit or new to formal credit. And what I see, and they're mostly in semi-rural areas, what I see now, that same customer who had very little exposure to formal credit now is actually seeing vernacular documentation pushed by the regulator, is now actually getting a digital footprint with the ARM certificates, is now actually repaying the loans. We find 99% digital payback in terms of through the banking channel. So that same consumer who is getting much more educated will also be yet another guardrail to prevent being susceptible to fraud, because now that consumer is educated. They may be deep into the country, but they are educated in a real sense right now. So I think there is great positivity in how banks, NBFCs and others are really building out the Bharat part of India.
Okay. Building out the Bharat part. Quick comment, Mr. Garg, and then final closing comments from Mr. Sinha. On the same issue with regard to how we are seeing a structural shift, particularly in the way borrowing patterns are changing.
That's there. I think there is great demand for credit, especially from the segments which I spoke about earlier, the personal loans, housing loans, MSMEs and all. That's very good. It's actually democratization of the credit which is happening. What worries me a little bit is that the industrial credit, which is the real growth pusher, that is not sort of taking off. Despite that, the credit deposit ratios are somewhat. What I'm a little bit worried about is that is there, which is not visible so far, though it appears from what RBI is doing, that there might be some instances of it. Is there credit for housing or personal loan getting into the stock markets, pushing that market? So that evidence, if we don't have that kind of evidence, if that structural shift is for sort of diverting the credit towards this, it will be a little bit of a problematic for us.
Absolutely. And Mr. K.V. Kamath had mentioned a number of rupees 1.7 lakh crore that's been lost. But Mr. Sinha, the final point to close this, is the shift that we are seeing where savers are wanting a higher return for whatever reasons, is that the biggest challenge for our banks and therefore also requires a policy response, perhaps incentivizing bank deposits from a tax point of view?
I don't agree with that. I think we are seeing a financialization of assets. People are not necessarily coming out of banks. They are, in fact, reducing their exposure to real estate and gold and other hard assets and coming into the financial system, which is wonderful. I think the priorities for us in the financial system now at this stage is really threefold. Number one, we've got to continue to formalize people's credit behavior, people's financial life, which is what is happening. And we've got to continue to push and get to the last person and really be able to provide them financial solutions. Second priority is exactly as Subhashji was saying, is that we need to make sure that industrial investment, corporate investment as such across the board increases, and that for that we have to reduce the cost of capital. We have to do more financial innovation so we can drive investment in the country. And number three, for certain areas, such as, of course, the area that I'm very interested in, which is climate finance, health, education, which is what the need of the hour is in India right now, that we can provide the financing solutions for those as well. If we can focus on these three priorities, it'll really help us getting to that 8-9% GDP growth number that we all aspire to.
Absolutely. And Mr. Sinha, as India is on the cusp of transitioning to a middle income economy, many things need to continue to be done, the good ones, and some of the riskier, unstructured ones perhaps need much more closely to be supervised by the regulator. I thank the entire panel for their time with us. Today there was so much more to discuss, but we are completely out of time. With that, it's a wrap. We'll see you again. Goodbye.